Hey, welcome everyone. Let's just do a quick roundup of price action today. Instead of looking at the S&Ps real quick, we'll do that in a minute. I want to take a look at the system right now in the VXX, which has been just a dynamic product still, especially with the person Algo Optimizer. It's still holding a short position. Um, it hasn't really been doing a whole lot right now, but as we end up at this like 39 handle, we will either look tomorrow at a last conditional change stop out function, which will kick this trade out uh, as the trailing stop, and also condition would be met. In other words, if the market closes greater than a certain line in the sand, literally is what this means, the last conditional change, um, then it would knock out the trade on the short side and just book the profit. So you can see we're currently short. We were long. I mean, this has been a kind of a dynamic product to trade in the sense that um, it's not as many people are fearful of volatility products. I think it's a dynamic product to trade across the spectrum, which is why we created the ELD file for all our subscribers and customers in this product. So it's done a fabulous job year to date. Many of you have seen the reports, and I kind of update these all the time so that you can see what the uh, in the videos what the performance is, and also whether you like trading this or not, how you can transform this to maybe taking inverse um, positions against this in the spider. So um, that's another positive. If this is short, then you're expecting the S&Ps to go up or at least not fall. So this is another way of trading this particular market. So year to date, and its performance, still in its, I mean, since the beginning of the year is really a fabulous return. And so we have to say, very grateful of coming up with this particular product as a trading vehicle. So now that you see what it is doing, it didn't crash. The stock market today did not really rally, but let's take now a look at the overall indices and see if that we are still in the camp of wanting to expect a market upside. All right, so today um, you can see the weakest link of the whole market: consumer staples, XLP, utilities, XRT retail, healthcare XLV, IYT transportation, GDX gold, bonds, and of course materials. ITB as in the housing ETF, which is like the actual builders. And you can clearly see all of this is the negative relative strength and as it relates with the person market catcher, it's all red. So it's relative, a sector against the S&Ps relative. What it is measuring in this column is the PMC indicator, the person market catcher, which is a relative strength comparative analysis using moving average functions that shares with us the market is negative versus the S&P. So while S&Ps might go down or they're not moving up, but the consumer staples is weakened against it. And until we get actual improvement in the trend of the relative strength with some decent volume and get something like this, you just got to avoid it for right now. Anyway, that's the consumer staples. As cheap as everything is in the staples. In fact, if you look at my weekly advisory service, the thoughts and observations, you would notice that out of the 52-week lows, the majority of stocks in the S&P at their 52-week lows are in the consumer staples. So no surprise there with that type of relative strength reading versus the S&Ps. In the energy space, while we did get an upside boost in crude oil, and yes, I've been still telling people that if you've missed the boat on energy, that's okay. It's in a trading range. We're locked between the gray line in the XLE, which is 72.27, and resistance at 74. 67 levels. So we're stuck in this range, and you don't want to be buying up at the breakout because it's not broken out, quite frankly. Volume doesn't look good, and the relative strength is not that formidably strong. So we are hoping and are hopeful we see a pullback in the energy space. And if we do, then it is my intentions to be, and we do have orders working, to be buying into the oil service sector, which is the OIH. Let's take a look at OIH and its performance today real quick. All right. Um, Yeah, not something here that I would say I want to get super long on looking at the space itself, maybe an individual stock, but I think that we will see a pullback. We're near my moving average components. This is the relative strength, while it's bright blue, is not as strong. This is again the person market catcher there. So I would have to say that just looking at the relative strength reading with where crude oil is, where the stock market is, the S&Ps that is, I think we still have a shot, a solid shot at a pullback here. We just need to be a little bit, demonstrate some patience. Looking at biotech moving forward, biotech's really gotten uh, well pummeled, quite frankly, and you have a lot of stocks in that sector, but it is starting to show some promise in many different aspects. Number one, I'm starting to see as it has declined, the relative strength indicator, the person's market catcher here, is starting to show some improvement. Seasonally speaking, it also has a tendency to rally, and so what we're all waiting for right now is to see if the indicators, if volume comes into play, and we start to look for intra-week buy signals in some of the names in this space. One stock you may be familiar with, um, Regeneron. If we take a look at Regeneron, we made note of this earlier this week. I'm expecting, while longer term, this stock has just completely plunged off its highs, and this is a pretty formidable double top. Many of you remember seeing me at the Traders Expo a couple years back and telling everyone that all of these highs looked like uh, institutional distribution. Everyone was saying, "Yeah, we want to be long biotech, and we love biotech. We love this space." And again, it has had a significant double top. But at this juncture and at this level in here, I'm starting to get the feeling, despite the news about cheaper drug prices and the need for doing something with costs of medicine, Regeneron, I think as we expand this, at least according to my work, here's another white line in the sand, an old support. Here's an old pivot support area. I'm seeing support another 20 bucks lower, and I'll be looking for intraday buy signals near that 268. Let's round up and say between 260 and 270 number in Regeneron. So watch for maybe some short-term buying opportunity. Today, by the way, we did get a PPS buy signal. I don't think that's enough to do it. I'd like to see a little bit of weakness, but you know what? Maybe today's low was close enough. Right? We'll get some further insights as the week progresses. So either, I mean, there's plenty of room to the upside, right? Um, so the volume's not great, but my volume indicator is showing some promise. This is a 60-minute chart. So it just populated a little high close doji. It's that orange colored candle and a PPS buy signal as we concluded Friday, or excuse me, Monday. So what I would be looking for is sometime between Monday and Friday, I'd be looking for stability, and I'd be looking for a consecutive series of higher highs, higher lows. And I also want to see the daily analysis pick up a little bit in terms of the indicator readings. In other words, I want to see some volume action do a bit better. I want to see the relative strength improve, and we just don't have that right now. So I think it's more likely to see support here, the short term 268, come into play, and watch that for some upside um, on further weakness in Regeneron. All right, so most people know that there is no single system or set of indicators that is absolutely perfect. I mean, what we try to do is to capture over time profitable trades. And so what's the couple key elements that we need to look at? Risk reward ratios, holding periods, and what's the average move that we've been getting within those factors, right? So Apple actually generated a nice buy signal and it got out. And it may have gotten out a little early. I get that. But this is the average profit length that it has been giving in this time frame, or at least on its risk reward ratio. So it doesn't get out every time at the absolute high, but a lot of times it gets out and then maybe it'll get back in, and then you'll see that the market's been chopping around. Here's a situation where it was long and it got out with a small loss after having a profit because why? It gapped lower. So it would have gotten out on a trailing stop feature. It did exactly what it should have. It got out and then as you can see, went short. And what did it do? It came near its trailing stop function and it kicked out the trade. So what's the point? The equity curve is up this year. It's doing wonderful as an end of day product. Traders can utilize this information to discover where your entry is, where your stop loss goes, and what your max target for profit. Unfortunately, there's another function in there that would trail out the stop or kick out a max profit. Now, um, with that stated, this is kind of good to keep your eye on it as far as a directional option trade. But I wanted to point out that we did form a doji today in Apple, and the more I hear about Warren Buffett liking Apple, I would be taking a kind of a closer look at this. I'm sure Warren liked it in the 140s. I don't know if Warren likes it at the 190s. So, Warren's been known to put out his likes about stocks, and then turn around and kind of trade him a bit, right? So letting everyone know his hand is something that he doesn't like to do, generally speaking. And when he does, he uses it to his advantage. So perhaps he's trying to get more attention into this space so he can lighten his load a little bit. I'm just suspicious that way sometimes of trades. Next to that, we have crude oil. And this is the system based on the 5-minute. We had some really good trade setups today. And there were a couple trades that we could have done a little bit better on from an algo perspective. Here's a scale out function. It stops taking trades at the time cutoff period, so it won't take any new trades after that period. So the overall performance for the beginning of April to now, and we're going to be rolling this over, has done pretty well. So today I was pretty pleased with the overall crude oil product. And as the mini Dow is concerned, kind of a choppy day, but the 5-minute system got some pretty good trades off. It just didn't build on an equity position. Looking at the performance recently, it's kind of just sitting here right now. So let's take a look at the periodic returns. You'll see, Friday not such a great day, but the week earlier was a great day. So all in all, the overall performance is doing phenomenal for this particular product to take trade signals. And you got to admit, this is kind of a choppy market condition. You'll notice it did not take a short position here because the criteria were not met. In other words, either the risk was too great by the time the sell signal came in, and it's programmed not to take excessive risk into trades. So with that said, it went long into the close, and it got out on a trailing stop feature and is now flat. So it's doing a wonderful job. So with that stated, I think just wanted to introduce you guys again as a follow-up what's going on with the markets and what's the Algo optimizer doing. And we're really, really excited about the next launch. And the next launch is the version number 17. And that is going to help us to optimize and give us a better filtering criteria for buys and sell signals, and to optimize each independently of each other. In other words, instead of optimizing, hey, what's the best risk reward for a buy and a sell, we're going to be breaking it down. And I can't wait till you guys see this. We're going to be doing a webinar on this in about 2 weeks, so stay tuned to that. And it's just delivering some spectacular results and helping traders really succeed in this really crazy market. So whether it's Apple or the VIX, spiders, it's just fabulous. Last but not least, we still have an open position in the IWM. And looking at the IWM, the Russell is still outperforming the broad markets. I'm still kind of, the fact that we did close greater than a last conditional change right here, the fact that the breadth of the market, the advanced decline, did rally and is closer to its highs of the whole move, gives me hope that we will continue to see some upside and possibly get the market up into the 160 region, if not maybe a little higher. So anyway, how did we end up today? Well, the Russell outperformed the broad market. So in terms of both its percent change gain as well as its market internal structure. So while we did have a good up day in the S&Ps, and you'll notice here the advanced decline on the S&Ps was slightly biased to the upside, 292 versus 209. With a stronger breadth, we really would like to see a breakout, and it would heighten the expectations that the S&Ps can get back up and maybe not make a new annual high, but at the least test what I'm hopeful to see around the 275. So we'll keep you posted. I hope this video helped you all, and we'll keep you updated as to the further performances as the week progresses. Take care.